welcome. You're watching Business Today Television. I'm Sakshi Patra. Well, the Festival of Lights is here, and we at BTTV wish all our viewers a very, very happy Dhanteras and Diwali. Remember, it's been a year of the unexpected in the stock markets. The heroes kind of failed, but the underdogs really shined through. But the roller coaster ride was nevertheless filled with a lot of learnings. Also, when we talk about gold, it outperformed amid the safe haven buying, amid geopolitical concerns, inflation, the rising interest rate scenario. But the big question that investors now want to know is that as we step into the new Samvat, where exactly should they be looking in for better returns? How should they be creating a winning portfolio? Which asset class is going to be outperforming, sparkling your portfolio even more in the new Samvat? To joining in to discuss and decode all the insights from the world of both markets and gold, I have with me two very, very special guests joining in with us. Somasundaram PR, the regional CEO, World Gold Council joins in. Also joining in with me on the show is Rahul Arora, CEO, Nirmal, Institutional Equities. Welcome to both of you, and thank you so much for taking the time out, and season's greetings to both of you.
Thank you very much.
Well, Mr. Somasundaram, let me begin by you. And I want to understand from you, what has been the biggest learning for you in the last 1 year? Somebody who's been watching the gold trends world over every day in and day out. How would you be really looking at the past, and what is the learning that you picked up?
Well, as I said, learning is something which we always knew. You always need to have a diversified portfolio. Clearly, equity must be part of everybody's portfolio in a growing economy like ours, and I'm sure my other guest will speak more about it. He's much more of an expert in that. But when it comes to managing your wealth, it is about portfolio diversification. Yes, gold has done extraordinarily well in the last few years in particular, and therefore it should always be part of the portfolio. But more important lesson that one should know is uncertainty is the way of life as we move ahead. Therefore, it is always important that we have a very well-diversified portfolio that meets our requirements.
Okay, a well-diversified portfolio is what is extremely important to have. Mr. Arora, what about you? The biggest learning for you as an investor in the last 1 year, how would you really sum up the last 1 year gone by for the stock markets?
First off, thank you for having me on the show, Sakshi, and wishing you, your family, and your entire team a very happy Diwali and the entire festive season. Obviously, the one thing that you learn I think the markets teach you this every year is never to take anything for granted. I think nothing in life is linear. The more you learn, there is still so much more to learn. And I think that's probably the biggest, investing in the stock markets, as I'm sure investing in commodities is a learning in itself. You're learning on the ground. A couple of years back, you had a Ukraine-Russia war that started. Now you have a situation in the Middle East. You're trying to pencil in what this could mean in so many different ways. So I think, make hay when the sun shines is one lesson. The second is never get too carried away by things, because nothing is absolutely linear, and be prepared for unpredictability at all times. That's pretty much what the stock market is about. But I'd still say it's one of the best places to invest your money. I think one of the best compounders as an asset class, and definitely a space I would consistently be overweight on at any point in time.
Okay. We've always heard from both of you in your professional capacities, asking you where should investors be investing, whenever the new year starts or the new Samvat starts. But I want to know personally, you and your families, how have you been, investing over the years, and how has that changed over the period of time with you taking more professional decisions? So, Mr. Somasundaram, on Dhanteras tomorrow, where do you think that you are going to be individually investing tomorrow?
I must be honest here that most professional investors, or those who have good professionals to advise, we just don't go on the basis of a single day. We don't change our long-term plans. Yes, Dhanteras is a great occasion. Clearly, there are families, we are not one of them, they will go and buy gold, and they may need it for a wedding, etc. But it's very important that we use these to increase our investments, but not change the way we allocate money. It's an extremely important thing. So that is something which any professional investor will tell you. So that's how probably I am investing. I mean, there are advisors who tell us what to do. Clearly, we will look for something more on a Dhanteras day and said, okay, you want in this fund or this particular thing, why don't we do it on Dhanteras day? That's the way it works.
Okay. Mr. Arora, what about you? You know, the debate between equity and gold remains an age-old one. You know, both equities and gold have definitely given good returns, strong returns to the investors over the long-term period in the past. But where are you going to be investing personally?
So, at any point in time, I think it's very important to look at asset allocation. And I think as Indians, we're never taught this, but I think, we've seen it around us anecdotally that the go to investments are predominantly gold and real estate. And I think, while that culture or the dependence on those two is certainly coming down, and I think for the last 3 years, you can see the kind of assets under management for all the mutual fund companies in India, the way they've grown. But predominantly, I think for the better part of my life that I have seen, it's pretty much been a go-to investment place, which is gold and real estate. And like I said, it's not something that our parents ever sat down and told us, but it's just something that's in our DNA. But
Yeah.
I think obviously, when you look at other asset classes like, debt, for example, they have their periods. But I don't think those are very extended periods of time where they'll actually outperform equity.
Okay.
There are some interesting other products that are coming out like real estate and so forth. But I think if I was to talk about asset allocation, I'd probably still say be 50-60% in equities, maybe about 15-20% a piece in real estate and commodities, predominantly gold. And the balance can be whatever else you want to go into. It could be more of other commodities, it could be REITs, other
Right. Okay. I think there was a slight glitch in the audio there. We'll try and fix that for you, Mr. Arora. And then meanwhile, I'll take the question forward with Mr. Somasundaram. So if someone really still says that, no, I have to buy gold, like you also pointed out that, families do have a tradition to buy gold on this Dhanteras. Today, you were also talking about that there are numerous options available, apart from the physical gold, gold jewelry, coins, which have been the traditional buying options. There is a gold ETF, there is a gold mutual fund, there is a sovereign gold bond, there is digital gold. There's so many options out there. But just because there is no touch and feel, people are still a little, hesitant about it. Maybe investors have started to go one step beyond. Maybe buying gold jewelry online is still something that they are doing, but are they actually going ahead and investing in these newer forms of gold? And would you really advise them that, in case you really have to go for gold, instead of physical this time around, perhaps try the other way around?
Yes, I would definitely say that newer forms have come in, and there are people who could be attracted by this. And it's very important that this kind of innovation keeps happening. Now, ETF is really not an innovation, but yes, there are people who would like to put it in ETF because they like the exposure to gold, and they may go for a multi-asset fund, or they may just go for high equity but have a special gold fund. So ETF is definitely a good option to go to. Sovereign gold bond, clearly that's one of the best investments ever.
Okay.
I don't think you can get a paper as good as sovereign gold bond anywhere in the world. The capital gains is exempt. In fact, the first bond is coming up for maturity end of this month. One of the best returns ever. So I think if there is a way to get your investments channelized into sovereign gold bond, I would always suggest that. And then, of course, digital gold and other forms they are not different forms of gold. They have different forms of buying gold. One definite thing is you don't buy jewelry unless you really need it. If you want gold, then you should look at the other forms of investments like ETFs, digital gold, bars, coins, even bars and coins with less, labor charge. But if you want jewelry, then you should go for jewelry. You shouldn't buy jewelry just because you want gold.
Okay. Rahul, let me take the point forward as far as the markets are concerned with you. Over about 9% of gains since last Diwali, the Nifty is going to be perhaps ending somewhere 2079 with decent set of gains, if not extraordinary. And this is despite multiple headwinds. You were talking about the kind of geopolitical risks that we have had to face, not one but two in just one or two successive years. High inflation, elevated interest rates, all of this was as a big headwind. But despite that, Indian markets have shown some kind of resilience. When you compare it globally, perhaps not that much, but individually they have performed decent. But what is the outlook that you have till next Diwali? Where do you see the Nifty?
So, I think making an absolute headline, as you rightly said, there are a lot of geopolitical concerns. We're dealing with very high interest rate levels, both in India as well as the United States. So I think that's another area of concern. And, I think, Sakshi, the one call that everyone in the world has got wrong has been the one of the US recession. The US has not gone into a recession, and everyone was expecting it to go into a recession. So I think if the US economy holds up in the next calendar year, then I think it could be relatively positive for global growth and as well as for global flows as well as for equity markets. The only question is, of course, if the US goes into a recession, the counterbalancing force to that could rates sort of come down next year, and if interest rates come down, what impact do they have on stock markets? So let's not forget, Sakshi, there are two of the largest democracies in the world go to elections next year,
Yes.
India and the United States. So I think there'll be a lot of work that the governments will be doing in terms of government spending in both those countries as well. But I think on a relative basis, we're going to be competing with flows with the United States.
Yeah.
That I'm very clear about, because I think that size of an economy growing at 4.5%, 5%, and from the developing economies, India growing at about 6-7%, these seem to be the two best investment destinations. And I think that's why you're probably seeing some FI outflows from India over the last many months, and it's finding its way to the US markets. But I think it's going to be a turbulent year, Sakshi. I'd be very happy if we're sitting here same time next year, somewhere between 20,000-22,000 on the Nifty. I think with all the uncertainties on the horizon today, I think we would have done a good job, which basically means I'm talking about the Nifty probably correcting 10-15% from here, but also maybe rallying 15-20% from there. So I think on a net basis, if we are where we are today, I think we'd be in a pretty good place if we're having the same conversation in Diwali next year.
Okay, so despite all the concerns that continue on the geopolitical front, the elections as well, the fund outflows that continue, 22,000 is the kind of targets that you have for the Nifty, correction of 10-15%, but again there could be a rally to closer to Diwali next year as well. A positive commentary nevertheless. Mr. Somasundaram, talk to us about the kind of macros you are looking at and how are they going to be impacting gold prices going forward from here. Recession not really happening, Mr. Arora is saying, and what is your own sense of how the US economy is going to be playing up on the Federal Reserve rates, the central bank's rates as well, and how all of this will be impacting the rates for gold?
Yeah, as you know, we don't forecast, but let's see how things are panned out for gold. You've got the highest interest rates. Interest rates are, in a sense, a negative coupon on gold, because gold, when you hold gold, you don't get a return. You incur a cost. So, and what is that cost? The simplest cost is the interest rates that you would otherwise get. So currently, the negative coupon on gold is very high, which means the interest rate is high. Despite that, it is holding on around $2,000, right? And then there are all these anxieties going around in the global arena, some of which might actually, probably not be there next year, hopefully. So that should again be something which is not very positive for gold, but that is something which is more like a headwind. Okay, but when it comes to the interest rates, as it comes down over a period, it's not going to happen in 2024 maybe, but over the next few years, if it comes down, then that's going to give a lot of headroom for gold to move up. Right? But so therefore, when you really look at how gold is placed, you do think that the next couple of years, you will have a lot of headroom for gold to move up. That's the way I would leave it. So for a long-term investor, not staying invested in gold will not be an option.
Okay. Okay. But since Diwali last year, the precious metal has risen about 20% so far. The MCX gold rate has surged about 11,000 rupees per 10 grams. We did see, all-time high levels again for gold this time. Is it fair enough to expect a similar performance, or one has to be extremely reasonable this time around? Because, 2 successive years, 20% surges hardly happened in the history.
Well, as I said, it is a little difficult. It is dependent on what happens to the interest rates, what happens to the other geopolitical issues that we are faced with. One thing, as I started off, as I said, it is going to be a period of uncertainty as we go along. You see the amount of gold that central banks have been buying. These 9 months in this calendar year, 800 tons has been bought by central banks. So there are obviously these uncertainties are occupying the attention of many, many investors, including the central banks. So can we expect a similar jump? Maybe not in the next 12 months. As I said, we don't forecast. But if you're really looking at gold over the next couple of years, I think you should expect some very handsome returns in gold.
Okay, fair enough. Not in 1 year, but over the course of time, very good returns expected on gold. Rahul, where would you be really looking in for winners in Samvat 2080? Do you think the underperformers of this year, the large banks and to some extent even the IT will, make a comeback? Or is it going to be another year where the underdogs like, PSUs, railways will continue to perform?
No, so I think the way I would look at it is look for sectors that are showing you positive earnings growth. And I think, like I was making the point a little earlier, if the US does land up going into a slowdown or a recession, IT is one sector that you actually want to stay away from. And as a house, we sort of have an underweight stance on it. But I think the way credit growth has surprised us in banks, when we started the year, we thought that number would probably be around 11-12%, but that's coming in between 15 to 18% for most banks. So I think banking is probably one sector that's going to continue to do well. The other, like I was saying, since we are running up to an election, and I think over the next 5-6 months, as we run up to the monsoons as well, infrastructure is going to see a lot of spending. So I'd be, fairly interested in looking at the cement sector. I think the results have been fairly all right in the quarter gone by. And as I was saying, if the government decides to do some spending for the bottom of the pyramid, I think you could land up seeing some amount of volume growth return to consumer staple companies as well. So I think that's probably another pocket of the market. And maybe finally, I think pharma companies in India have been doing well. They've been doing well since the start of COVID for different reasons at different points in time. But I think that's probably another space that looks fairly interesting to us. So I think if I was to be, overweight on 4 sectors approaching the next calendar year, it'd probably be banks, cement, pharma, and to some extent, like I said, if government spending pans out as we're expecting, maybe consumer staples. I think that's probably the way I would look at it.
Okay, so 4 key sectors where you should be looking in to deploy some money over the next course of year: banks, cement, pharma and consumer staples as well. What about the new age tech stocks, Rahul? Are you going to be looking at them more constructively now? We've seen, some of them at least consecutively for the second quarter report profits on the operational profitability front as well. The commentary is more positive. They are actually taking more steps, bold decisions when it comes to perhaps garnering in more revenue as well in terms of adding platform fees for some of the companies. To your own sense of how would you look at them?
So these have been very volatile companies to be investing in. I think when when these companies listed, a lot of them went up 3 or 4 times, and then they sort of became less than half their price. In fact, some of them came down to almost a fourth or fifth of their highs as well. Yeah. But as you rightly pointed out, I think the one thing that's changed is some of these guys are either approaching profitability or have turned profitable, and their negative cash flows are decreasing. And I think that's what the market has been rewarding. So I think whether you look at a Paytm or a Nike or a Zomato, Zomato, for example, should have a very good third quarter as well, because you had the Cricket World Cup that's currently underway, and the kind of deliveries that I've done, I'm sure would be far higher than what they've done in Q2. But my only point here is at what price, because these have already done so well. I think if you want to invest in these names, you need to moderate your expectations, is the way I would look at it. I'm not saying do not buy these companies. Mm-hmm. They may still be good for 20-30% more. But if you're expecting them to be potential multi-baggers even from here, which they have been from their lows, mm-hmm. I don't think that's a reasonable expectation to have. And like I said, even though their negative cash flows are reducing, I hope they don't need to go out and raise further money from private equity and venture capital funds. If that happens, then you're sort of back in that same loop. But if they're able to fund the business from their own cash flows, and they're able to turn profitable over a period of time, then these names could potentially compound by 15-20% even from here, but don't have disproportionate return expectations from these companies.
Okay, fair enough. Mr. Somasundaram, I'd like to now understand more trends for the new Samvat also on gold from you. In the reports that you've put out so far up until Q3, you pointed out that, of course, we've seen that the central banks have been buying at a historic pace. You've also talked about how perhaps, the jewelry trends continue to be robust as well. The resale is picking up as a new trend, which you talked about as well in the recent past when the prices really shot up to historic highs as well. How are you looking at the key trends for the new year in terms of demand, the jewelry buying, central banks buying as well?
Yeah, first thing, let me clear the central bank piece. Central banks, we did a survey some years ago. A lot of them have expressed that they will continue to be favorable towards gold. Clearly, we can't speak for any central bank, but we have seen that in the aggregate figures. So we believe that central banks will continue to keep buying gold, as part of their diversification, safety, whatever it is that is driving them to buy gold. So that will be a positive feature for gold market globally. When it comes to jewelry in India, yes, we have seen a jump in the third quarter. The first half was not exactly a great first half this year, but when we look at how it is going to pan out, we can speak about the fourth quarter, you will see a jump, but the recent price increase will generally make consumers more price conscious. At this moment, what we are seeing is there is a lot of interest in gold, but when people go to buy, they're a lot more, price sensitive. They're asking, how much did it go up and things like that. So that will continue. Therefore, it might lead to a lot of people buying small quantities of jewelry. So you may not see the same degree of demand this Diwali quarter as you saw last year, unless prices correct downward. That's how we see it.
Okay, all right. Then I'll come down to the last couple of questions to both of you. If somebody has, say, 10 lakh rupees to deploy this Dhanteras and Diwali, I'm going to ask you, how are you going to advise them to really construct a portfolio, starting with you, Mr. Arora?
I'd say, so you said 10 lakh rupees, right?
Yes, yes.
Okay, so I'd say maybe 6 lakhs out of that in equities. I'd probably say 1.5 lakh each in real estate and gold. That takes me up to 9. Maybe about 50,000 in debt, and the balance 50,000 go out and party.
All right, wonderful. I really like the component where you've talked about that. Yes, there is not everything for investment. You have to be careful about that. You have to live in the present moment as well. So keep that 50,000 rupees for your parties as well. So that's also considerate of you for all our millennial viewers out there who would be very, very disheartened if they have to shell out all their money and put all their money in all these investment options. What about you, Mr. Somasundaram? What would you really advise?
Since Rahul has already suggested, I would be a lot more cautious to say that while you take that advice, because I don't know the age profile. If I'm talking to a person like my age, it will be obviously
for a new age investor, somebody who's aged between 25 to 30 years.
Well, if I were to look at someone of that age, I would first of all tell them, look at it long term. Look at everything in a very long term. That's what actually gold treats you. You don't wake up every day morning and do a MTM of gold, which is why gold survives, which is why gold is such a precious asset. And every other asset class, you wake up in the morning, you can't resist having a look at whether you have made a profit or a loss. Gold is the only thing where you don't do that. That's why you hold it for long term and you benefit from it. So what I would tell them is, whatever you do it in a long term, in a consistent way. Rahul has already mentioned it. Obviously, that's a very typical thing that you go into the stock market, etc. But whatever you do it with a proper advice and do it over a long period of time. Don't be swayed by short term, oh, this asset class is coming, let me put some money in that. That's probably what both of us are trying to say. Be long term, stay invested, economy is growing. There is no way we will not make money in the long term when you are in the Indian equity markets.
And that's wonderful. That's wonderful. Well, thanks to both of you on that note, and for sharing all that wisdom with all our viewers on the occasion of Dhanteras and Diwali. Here's hoping that this year really turns out to be a very prosperous one for your own families, for your teams as well. And many thanks for sharing such wonderful insights with all our viewers. Yet again, happy Dhanteras and Diwali to both of you.
Thank you very much.
Thank you so much.
So much.
Thank you so much. And with that, we wrap up this special Dhanteras edition for you. But do stay tuned on to Business Today Television as the festive spirit continues to carry on, and we will get you all the insights from the topmost voices from the world of stock markets.